Listen up. Let me ask you something. Have you ever sat in front of your laptop staring at charts, hoping that the next trade will be the one that changes your life? You've probably heard stories about people turning $1,000 into $1 million in just a few months. Sounds exciting, right? But here's the thing. 95% of traders lose money in the market. Why? Because they jump in without understanding the game. They think trading is about luck or quick tips. They see someone post profits on Instagram and think, if they can do it, why can't I? But let me tell you something. Trading isn't gambling. It's a skill. And like any skill, it takes time, effort, and discipline to master. In this video, we're diving deep into High Probability Trading by Marcel, a book that has helped thousands of traders go from consistent losses to steady profits. By the end of this summary, you'll know 1. Why most traders fail and how you can avoid their mistakes. 2. The exact strategies used by professional traders to stay profitable. 3. How to turn losses into learning opportunities and build long-term wealth. So grab a notebook because what you're about to learn could change the way you approach trading forever. Let's get started. Section 1. What makes a good trader? All right, let's break it down. What separates successful traders from the rest? Is it luck, a secret formula, or maybe insider information? Nope, none of that stuff matters. Successful traders follow a set of principles that keep them grounded and focused. Here's what sets them apart. 1. Preparation. Hard work, outside market hours. Successful traders don't just wake up and start trading. They prepare. They study charts, analyze trends, and plan their moves before the market even opens. Think of it like a chef preparing for dinner service. They don't just walk into the kitchen and start cooking. They prep their ingredients, sharpen their knives, and organize everything beforehand. Same goes for trading. If you're not prepared, you're setting yourself up for failure. Market knowledge. Understanding the game. You can't play chess if you don't know how the pieces move. Similarly, you can't trade successfully if you don't understand how markets work. Successful traders know which markets to focus on, how they behave, and what drives price movements. This isn't about guessing. It's about studying patterns and probabilities. 3. Patience and discipline. Waiting for the right moment. One of the biggest mistakes beginners make is overtrading. They jump into every opportunity they see, thinking, what if I miss out? But guess what? Not every trade is worth taking. Professional traders wait for high-probability setups. They're patient. They don't force trades. And when they do enter, they stick to their plan. If the trade goes against them, they exit quickly. No emotions, no ego, just discipline. 4th. Capitalization. Treating trading like a business. Trading isn't a hobby, it's a business. And like any business, it requires capital. You wouldn't open a restaurant with $1,000, right? Same logic applies here. You need enough capital to handle risks and capitalize on opportunities. 5. Risk management, protecting your money. Rule number 1 of trading, don't lose money. Rule number 2, don't forget rule number 1. Successful traders always have a risk management strategy. They never risk more than 1 to 2% of their capital on a single trade. Even if they lose, they won't blow up their account. Small losses are part of the game, big losses aren't. Now, compare this with failing traders. They undercapitalize, lack discipline, overtrade, and chase tips instead of strategies. And guess what happens? They lose. Linter. Section 2. The knowledge of trading. All right, now let's talk about the journey of learning. Trading isn't an overnight success story. It's a process. Marcel emphasizes that you need to invest both time and money to become a skilled trader. Here's how you can approach it. 1. Investment in learning. Just like any other profession, trading requires education. You wouldn't expect to become a doctor or engineer without years of study, right? Same goes for trading. Expect to spend at least 2 to 3 years learning the basics: technical analysis, risk management, psychology, and more. Books like High Probability Trading are a great starting point. Join courses, attend webinars, and watch videos. But remember, learning doesn't stop after a few months. It's a lifelong process. 2. Experience as the best teacher. Every loss teaches you something valuable. Instead of feeling bad about it, analyze what went wrong. Was it poor analysis, bad timing, or did you ignore your rules? Learn from it and move on. Over time, these lessons compound into wisdom, reducing the frequency and impact of mistakes. 3. Capital management. Divide and conquer. Here's where smart capital allocation comes into play. Marcel Link suggests dividing your money into 4 categories. Startup capital. Enough to start, but not so much that losing it would cripple you financially. Working capital. For ongoing trades, ensuring you're never out of the game when opportunities arise. Enjoying life. Capital. Money for personal expenses, so your mind isn't distracted by financial stress. Tools. Capital. Investing in quality trading tools, software, charts, and reliable data feeds. This approach ensures you're prepared for anything the market throws at you. Section 3. Be realistic in real life, and trading dreams are good, but in trading, realism is your best friend. 1. Set achievable goals. Don't expect to turn $1,000 into $1 million in a month. Success stories like that are outliers, not the norm. Set realistic goals based on your capital, skills, and market conditions. 2. Treat trading like a business. Trading requires capital, patience, and a strategic approach. Expect to invest time and money before seeing profits. Treat it like a startup. You won't see returns immediately, but with persistence, you'll grow. 3. Learn from others. Marcel Link shares his early days as a waiter among aspiring artists in New York. Everyone had big dreams, but few were realistic about the journey. The same applies to trading. Learn from those who've been there, done that. Section 4. Becoming a better trader. The digital age has leveled the playing field. Today's traders have access to the same data as big firms. Here's how you can use it to your advantage. 1. Access to information. Use online resources, forums, and communities to stay updated. Follow experts, read blogs, and watch videos. Knowledge is power in trading. 2. Technical and fundamental analysis. Master both types of analysis to predict market movements better. Technical analysis helps you identify trends, while fundamental analysis gives you context. Combine them for maximum effectiveness. 3. Avoid news traps. Don't trade on news alone. Markets react to news in unpredictable ways. Focus on how the market behaves after the news breaks. That's your truth. Section 5. Technical analysis and trend following. To truly excel, you need to see the market through multiple lenses. 1. Multiple time frames. Don't rely on one chart time frame. Use a combination to get a fuller picture of market trends and potential reversals. 2. Follow the trend. Trade in the direction of the trend for higher probabilities of success. Use tools like moving averages and trend lines to identify trends. 3. Risk management. Always prepare for pullbacks and manage your risk accordingly. Conclusion: your path to trading success. Let's summarize everything we talked about today. 1. Education comes first. Learn before you earn. 2. Emotions kill profits. Stay disciplined and stick to your plan. 3. Expectations matter. Aim for steady growth, not overnight riches. 4th, tools and strategies.